The year-end rebound in Hong Kong and Chinese stocks that began in November extended for a third month into January as China lifted pandemic restrictions. Tech giants Tencent and Alibaba have been the standout performers, while Singapore reopening plays such as SIA and Genting Singapore have also been beneficiaries. Find out how Macquarie Warrants performed compared to the share underlyings over the past 2 months.
Hi, I'm Jamie from Macquarie Warrants, and I'm here to share with you some highlights of the market action last month and how you could have used warrants to capture some of these moves. Since our last commentary video covering market moves in November, headlines were dominated by news of China's much anticipated reopening. As the Chinese government announced new easing measures during the month of December, Hong Kong and Chinese stocks extended their rebound. Tech giants Tencent and Alibaba led the extended rebound with gains of 40% and 35% in the last 2 months, after China said that their regulatory crackdown on the Chinese tech sector had finally come to an end. During this time, Macquarie's trending call warrant over Tencent, YW2W, soared 185% from 8.6 cents on 30th of November to 24.5 cents on 31st of January, while Alibaba trending call warrant QOWW during that period spiked 111% from 5.6 cents to 11.8 cents. The respective put warrants, on the other hand, fell 90% and 64% respectively as put warrants move inversely from the underlying shares they track. Here at home, Singapore shares also enjoyed a positive last 2 months. Reopening plays such as airline, SIA, and casino operator Genting Singapore were amongst the leading Singapore index stocks, with gains of 7.6% and 12.5% respectively from 30th November to 31st of January. SIA's trending call warrant JUJW rose 4.1 cents on 30th of November to 5.5 cents on 31st of January, a 34% gain, while Genting trending call warrant TLBW rose 54.5% from 1.1 cents to 1.7 cents over the same period. There are no put warrants available over SIA and Genting. You'd have noticed that the warrants moved in a larger percentage than the underlying shares. Indeed, the ability for warrants to make magnified gains against a small investment capital outlay is one of the top reasons why investors will consider using warrants to trade short-term volatility in the markets. To find out the estimated returns on the warrants and whether they are sufficient to more than cover for the holding cost known as time decay, use our warrant selector tool. Users need only to put in the target price of the stock over the intended holding period to see the simulated percentage returns of the warrants to determine if they will cover the time decay loss. Looking at the month of February, while one wonders if the Hong Kong and Chinese stocks will continue their upward momentum or hit technical resistance levels, here at home, the Singapore stock market looks set to be moving on earnings releases. Here are some of the key blue chip companies announcing results this month. Investors who are expecting a big move in the shares this month on results can consider using warrants to trade them at a small fraction of the share prices. Contact us at our warrant hotline at 6601-0289 to find out more. You can also access free warrant investment ideas by scanning the QR codes in blue to join our Telegram channel. See you next month.